Hey everyone, Coach Investor back to another video for today. Now, first of all, apologies for the delay. Usually these videos do come out right after the earnings call. Right now it's coming out right before the market opens. Apologies for that. And also, if you can't hear by my voice, I'm feeling a bit under the weather today, so bear with me. Now, in this video, we're going to go over Amazon's earnings report and a couple of things that I want to mention that were mentioned during the earnings call. Now, for those that don't know, Amazon is my second largest position, extremely bullish on the company. Of course, we knew that some numbers in this report would be a bit, let's say, weak-ish. But for me, the long-term thesis here is still intact, and actually I'm more bullish than ever on Amazon. So we're going to have a look at all of that in this video. If you enjoy this type of videos, leave a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, for Amazon, they beat on revenue by quite a lot, but of course they missed on non-GAAP earnings per share. They also took a hit when it comes to their investment in Rivian, which we're going to have a look in just a bit. So first of all, net sales increased 9% to $149.2 billion for the quarter. North America segment sales increased 13% year over year to $93.4 billion. Now, the international segments decreased 8% year over year, but of course, it increased 5% when you exclude the impact of foreign exchange rates. And then for AWS, that increased 20% year over year to $21.4 billion. So we're not seeing that 25 to 30% increase anymore. To me, this was expected. Now, we'll continue here. Net income decreased to $0.3 billion in the fourth quarter, or just 3 cents per diluted share. Now, of course, net income includes a pre-tax valuation loss of $2.3 billion, including in non-operating income expense for the common stock investment in Rivian. Now, if you compare this to 1 year ago, this was a valuation gain of $11.8 billion. So again, this doesn't really change the core business for Amazon. It's just an accounting thing here that you always have to keep in mind. I believe we see the same thing with Ford. So there is that. Now, I'm not going to go over the full year here because, well, it's just a bit of the same. But all these achievements for AWS, for, well, Prime, subscription, etc., all great for Amazon. We've covered Amazon a lot on this channel. So if you want to watch those videos, those will be somewhere in the top right corner. But for their first quarter 2023 guidance, we have net sales are expected to be between $121 to $126 billion, or grow between 4 to 8% compared to the same quarter last year. Now, the guidance anticipates an unfavorable impact of approximately 210 basis points from foreign exchange rates, operating income to be between $0 to $4 billion. Okay, not amazing there. This guidance assumes, among other things, that no additional business acquisitions, restructurings, or legal settlements are concluded. Okay, so there is that. Now, let's go to the most important part, which to me is this one right here. So net sales for online stores, that's down 2% or up 2% if you exclude FX to $64.5 billion. Of course, Q4 is always their best quarter. Now, physical stores, we don't really care that much what happens there. Third-party seller, that's where I'm more interested in. Third-party seller services, subscription services, advertising, and AWS. Bigger margins there, also rapidly growing segments, as you can see. That's up 20% year over year, or 24% on an FX neutral basis. Great there. Subscription services, that's up 13 or 17% year over year, keeps increasing each and every quarter. And then my favorite here, advertising services, that's up 19% year over year, or 23% on an FX neutral basis. And as you can see, huge increase in the last couple of quarters there. Their advertising service, their advertising business is huge. It's bigger than Netflix. It's bigger than YouTube as well. I mean, when it comes to, well, money coming in. So this is still a very underrated segment for the business that will just keep on growing, and people will maybe notice it when it becomes extremely big. And then the last one here is obviously AWS. As you can see, in the past, it grew extremely fast, 39%, 40, 37, then it came down a bit, 33, 28, and now we're growing 20% year over year. Of course, there is a reason for that. We've seen this with Microsoft, we see this with Google as well. We're going to have a look at what they mentioned during the earnings call when it comes to AWS. But $21 billion, growing 20% over a 40% last year, to me is still quite okay. Then you have to look at the profitability of it. So operating income for that is down 2% for AWS. Operating margin percentage of AWS sales is now 24.3%. That's less than the 26.3% last quarter, and obviously less than the quarters before that. So we have to keep an eye on that. Of course, we care that it continues to grow, but we have to look at those metrics here because that's what makes AWS so strong for Amazon. You probably heard this a couple of times already. At current valuations, you're getting, well, AWS and then all the rest of the business for free. If you put a multiple of, I don't know how much they said, but okay, that's fine when the business is growing extremely fast and, well, the margins here are around 30%. Would you say the same if the margins were down to 20% and it's only growing 20% year over year, or maybe a bit less? Who knows? Probably not. But then again, if you go back to the other segments, the advertising one, well, of course, you can put advertising in AWS and then the rest is free, let's say. So right now, to me, nothing was really surprising here. Of course, we have to have a look at total stock-based compensation. We can see it increased a little bit quarter over quarter, but not such a dramatic increase there. So fine, we'll see what happens. Of course, if we look at year over year increases, that increased quite a lot. But for the past couple of quarters, the increase there wasn't that much. We can also see that the employees, the total amount of employees has been decreasing as well. Makes sense. We also had those layoffs. You will see that effect trickle down in the next coming quarters. If you see from last year, employees are down 4%. Now I want to touch on a couple of things that were mentioned during the earnings call. So the first thing is on the international growth when it comes to e-commerce. He says here also, by the way, this was the first time that Jassy came on the call as a CEO. So he says here when it comes to international growth, if you look at countries like India, Brazil, the Middle East, Africa, Turkey, Mexico, and Australia, and a number of those type of countries, we like what we're seeing. He's saying this in the context of, well, the more mature markets such as North America, Europe are, let's say, nearing their peak, or the impact there when it comes to, well, an economic struggle is impacting the business stronger. But he sees lots of improvements in these markets that we've just mentioned. Then when it comes to AWS and the slow in growth there, so he says here in most enterprises right now, they're acting cautiously, which basically means you're spending less money. But when it comes to AWS, in this particular instance, is that we're going to help our customers find the way to spend less money. We are not focused on trying to optimize in any one quarter or any one year. We're trying to build a set of relationships in business that outlast all of us. And to me, this is great. Of course, in difficult times, if you're a company that is using AWS and suddenly AWS comes in to help you to still operate your business as best as you can, but you're spending less money right now, you're going to remember that when times are much better. I mean, Amazon's basically mission statement is to offer you the best service possible for you to waste less time and have more value for your money. Of course, that's how they built their relationship between you and Amazon.com. Then when it comes to the business segments that are not really that great for Amazon, so it talks here about the physical business investment, physical store investments. I think there were just some areas where we didn't have conviction that they were going to be big needle movers for Amazon. So obviously these investments there have been cut off, as well as some of these Alexa investment that we've talked in the past. But when it comes to investments in a couple of other segments, such as these right here, it says we're very enthusiastic about our investment in streaming entertainment devices, our low Earth orbit satellite, and couple healthcare and a few other things. With healthcare, I'll have to make a completely different video another time. He continues by saying it only takes one or two of them becoming the fourth pillar for Amazon for us to be a very different company over time. 100% agree. I think healthcare could be huge for Amazon. Obviously, the low Earth orbit satellite could be something as well. We know that Starlink is extremely popular. Amazon and Starlink, well, Blue Origin is always competing with Starlink and SpaceX, so it will be interesting to see what happens there. But healthcare is going to be huge for Amazon, in my opinion. Of course, there's also Buy with Prime. They've said that what they see sales increase by 25% or so for websites that suddenly have Buy with Prime. I'm going to talk about that in another video as well, but some very, very positive signs there. Overall, this quarter to me was okay, to be expected. I did not expect something else, so for me, I'm fine. If it drops under $100, I'll get some more shares if I can. If not, I'm fine. I'll be patient with a company like Amazon. I expect it to own it forever. I made a video if I can only buy 3 stocks, 3 companies. Well, Amazon was one of them. Of course, do share your thoughts down in the comments below. What do you think about this quarter? What do you think about your view of Amazon? Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.